Hey guys, welcome to Spaces with Kalu again. This April the 30th, 8 p.m. West African time. Glad to have you all here today. Today we're talking investing for returns. Hey guys, welcome to Spaces with Kalu again. This April the 30th, 8 p.m. West African time. Glad to have you all here today. Today we're talking investing for returns. People are seeing Twitter again. I'm talking. Twitter is doing repeat. I don't know what's going on. Obi, are you hearing me repeat? Wow. So we're good. Okay, super. Let's go for it. All right. So Obi, welcome. Thanks for saying hi. We've got Brenda here. I cannot hear repeat from my end, though. Gotcha. So we're good? Okay, super. Looking good. So I've got Brenda here. Thanks, Brenda, for joining. I've got Tony as well here. And I've got Gloria as well. They're all from FCMD. And what I want to do today is essentially to have us talk through investing, really, right? Let's do it this way. How does a registered and regulated institution set interest rates that they then offer to investors? If I want to invest money and I have 100,000 and I walk into a SEC registered institution, how they determine how much to pay me? Because if I get that answer, that would help me understand how to spot other offers that are not genuine. That's essentially what I want to do today. So that's why kindly asked Brenda and Gloria and the FCMB team to come and just walk us through this so that we can understand the workings behind the determination of rates. And of course, talk about what they then offer as an alternative. If we're not going to invest in quote unquote Ponzi, what is out there for us to also invest in? That's what we want to talk about, right? All right, so Brenda, I've got you. You can just go off mute and say hello. Then we'll have Gloria also go off mute and say hello, and then we can start. What is out there for us to also invest in? That's what we want to talk about, right? All right, so Brenda, I've got you. You can just go off mute and say hello. Yeah, good. Hi. What about Gloria? How you doing, Gloria? And say hello, and then we can start.
Hi, Kalu. Good evening. It's so great to be on your space tonight.
Excellent. Excellent. Thank you so much. I appreciate you guys dropping in. So, yeah, the way it works, guys, we're going to have a conversation now with Brenda and Gloria. Tony, welcome. I see you as well. Obi is helping us as well. If you want to talk, you can send Obi a DM or send me a DM. I will just have you on mute and we'll talk. But Brenda, let's get right into it. I don't think it's going to be Brenda or it's going to be Gloria that's going to answer, right? When you guys get investments or deposits, right? Just walk me through. How do you set the interest rates that you pay out? Like we've got the legacy money market fund. So I understand that fund invests in short-term securities. So let's say I want to have an emergency fund. I want to put money aside. I can open an account to say 1,000, and I can put in monies like quarterly or monthly or even daily. And you guys then pay me a return that I can withdraw at any time. How do you guys set your rates? How does it work? How should it work? Maybe you can take it from there. Thank you. Quarterly or monthly or even daily. And you guys then pay me a return that I can withdraw at any time. How do you guys set your rates? How does it work? How should it work? Maybe you can take it from there. Thank you. Sure, go for it, Gloria.
Okay, hi, Kalu. So Gloria will actually be walking us through this part of the conversation. Then I'll come in much later, to talk about some other aspects of it. So I think Gloria should handle this. Thank you.
Sure, go for it, Gloria. So it's Gloria. Sure, go for it, Gloria. You're good. Hi, Gloria, can you hear me, or Brenda?
You're good. Hello, Carlo. Hi, Gloria, can you hear me, or Brenda?
Yes, I can hear you. So I'm just waiting on, I think Brenda had asked Gloria to go ahead and speak, so she can go once she's ready. I'm good.
Okay. Hello, Carlo. I can hear you. You can hear me. Yes, I can hear you. So I'm just
Oh, super. So, Tony, then you want to take that on?
So she can go once she's ready. I'm good. Okay. Is she added as a speaker?
Yes, I sent her an invite. So I did see her a while back. I think she's dropped off. Yeah. I see Form as well. I did add her as a speaker, but I think she's dropped off. Yeah. So I mean,
Yes, I sent her an invite. So I did see her a while back. I think she's dropped off. Yeah. I see Form as well. I did add her as a speaker, but I think she's dropped off. Yeah. Okay. So I mean, yes, it is absolutely. So we can hear you. Good evening. So I think how different types of money market instruments, right? So some of those could be fixed deposits, investments in treasury bills, some commercial papers, but the credit rating has to be, A plus or higher. The credit rating for any instrument that we invest in for the money market fund has to be top rated. It could also include some fixed deposits, in some top credit rated institutions as well and banks. So how we come about that is really just an aggregate of the investment instruments that are held in the fund. So if you look at the current rate that treasury bills are currently being offered in the primary market, you know that the 1 year T-bill, the last auction was about
I think it was less than 5, about 3, 4.
Yes.
Very, very low. Yeah.
It's about 4.
Yeah, okay.
Yes, quite low. So, it just depends on the particular proportion, that treasury bills, the weighted average of the whole fund. I don't want to get too technical, but just imagine an average of the different instruments in there.
Yeah.
That's how we are able to offer the return on the money market fund. So, the money market fund is not meant to be risky investment. So, we will not invest in high risk instruments, things that on the market are offering maybe 12-13% are not investment instruments that we will invest in, because number one, they are not rated A minus at the lowest, not with top rated institutions. So if you look at treasury bills that are currently 4%, if you look at some fixed placements that are maybe running about 5-6%, if you look at some, that the rating, are currently at about, all 10% really.
Yeah.
So you just average them out, use the different weights that they're being held in the fund, and that's how you get the return.
Okay.
So the 90-day average for the money market fund, was about almost 6%.
Yeah.
So it just gives you an idea of how the rates. I hope that's clear.
Yeah.
Clear enough.
Gotcha. I mean, what I hear you saying is this, right? The rate that you offer is a derivative or is derived from where you are investing. And since you guys are doing money market, right, and you are SEC approved, registered and all that, and it's more or less a low risk, right, because you're investing in the federal government, that's the bulk of what you're invested in. So the returns that you are offering are based off what you have invested in. So if the returns on the federal government treasury bills, and of course treasury bills are borrowings that the government does for 91 days. So if those returns are, for instance, 4-5%, right, then that forms the range or the starting point for where you can then offer back to investors. That's essentially what I hear you saying. It's tied back to where you are deriving those returns from, more or less.
Exactly.
Gotcha.
Exactly.
Yeah. So I mean, why I'm making this point is that it's important that when we are trying to invest in Nigeria, we see a lot of offers, or I see a lot of offers, make 10% a month, make 20% a quarter, make daily returns. And those figures are very wide. And someone asked me and said, hey, Carlo, how can I look at an offer and know how do I determine if this offer is fake? I don't know about finance. I don't know about banking. And that's essentially what I'm trying to get across, that when you look at the return of, say, 10% a month, what the person is trying to tell you is that they have a way that they are investing and they're going to make 10% a month. You should then start to ask a question: how is this possible? What investments out there are generated, that's in the securities market, right, are generating that high amount of returns to generate 10% minimum to pay you and to also make a profit for the person basically making that offer to you. So that's exactly why I'm going down that route. So I've got Gloria in here as a speaker. I know she wants to add to it, or I can move on to the next question. Gloria, if you want to add to our conversation, you can unmute and go ahead and speak. Otherwise, I could just go on. Yeah, there you go. She'll mute it.
Okay. Hello, Roger. I hope you can hear me now.
I can hear you perfectly.
Okay. So apologies, I have some network issues at the start.
Oh, you know it, yeah.
So the last thing I heard was ask your question around how does a regulated company determine how much interest to give.
Yeah.
Is that still what we're talking about?
Correct. We were talking about around that. Yes, correct.
Okay. So I think it's easier for me to just use a typical commercial bank.
Okay.
So if you just to make things a bit simple, let's just imagine that a bank wants to take some money from you at 8%.
Yeah.
I think that's a kind you can get from any commercial bank now. So to determine what's rates, to explain how they would have come about that 8%, is for you to ask yourself, what do banks typically invest in? Mm-hmm. So if I'm giving you your money, where are you putting in the money? Mm-hmm. And what kind of returns are you going to get from that?
Good point.
So for a typical bank, banks collect money, and typically there are two classes of assets that they are allowed to invest this money in. So they give loans, mm-hmm. and then they also invest in investment securities, fixed income market. So from all that has been going on, probably for a bank you can get an average rate of about 10% from a fixed income, from entire fixed income instrument. Now it used to be higher than that, but because of all of this this has dropped significantly. So if you look at the book, and you look at the average interest they can earn on those assets that they have, so the loans and the investment securities, if it comes to, let's say, about 15%, so the bank is going to look at this, okay, so I can get 15% all of these investments, net my cost. So a typical bank will have NDIC cost, will have AMCON charges, and all of that needs to be taken care of. Of course, the fixed cost too is taking care of the buildings and all of that, and the salaries of personnel and all of that. So all of that put in is to sit and say, okay, what kind of margins, considering the environment, the competitive environment, considering what other competitors are doing, the bank sits to now determine, okay, if I net up all of these costs, what can I afford to pay? So that's how they come to arrive at that interest rate we're talking about.
Gotcha. So this is the interest I'm earning. Like if I put money in the bank, 100 grand in the bank, fixed deposit, this is how they generate that number they pay me back, right?
Yes, exactly.
Okay, so the question is, how does this tie back to, say, we see CBN will come and do the MPR, and again, not to get too technical, they do this monetary policy rate where they say the rate in the economy is this percent or that percent. Which is more critical in the rate the bank pays me? Is it the MPR or is it the inflation rate? What does the bank look at when it wants to pay me a return? Is it that CBN rate, that is you guys borrow money from the CBN, or is it the inflation rate, more or less?
Okay, so For us in the country as we speak now, I'm not sure any fund holder is looking at inflation because really, sincerely speaking, this environment now, almost all fixed income generating assets are all negative.
i.e., not making a real return, i.e., the rates are less than the inflation rate.
I'm not sure. I mean, the highest possibly, maybe you get I'm not sure there's any instrument that's paying above 15.9% as which inflation is now, as we speak.
I don't think there's any in short term. I don't think there's any, no.
Yes. So looking at that, we can look at, okay, yes, NPR plays a role. So the bank keeps an eye on NPR. So NPR for many of these companies is a signal towards where rates are headed. So if CBN decides at the next monetary policy meeting they're going to increase rates by say 50 bips, it's sending a signal that they are quite positioning themselves to begin to increase interest rates. So if these interest rates begin to show in T-bills rates going up a bit, in bond rates going up, banks themselves too, and all these investment houses who are competing with all of these other investment options will have no option but to raise their own rates too.
Yeah, Gloria, you use a technical word, so we have to make it define it. So you said 50 bips. What does that mean?
Okay, so I mean, if they're going to raise, say, NPR is at 11.5%,
okay.
So if we raise it by 50 bips, it goes to 12%.
Gotcha.
That's 50 bips.
So you're saying that if the central bank raises the amount of interest it's going to charge the banks from 11.50 to 12%, that means that you guys are going to pay CBN more. So what happens? Let's take it from there.
So that means that if we're paying CBN more, that means that our cost of funds there has increased,
Gotcha.
And that means that will begin to reflect in all other instruments too. So the banks will have to start adjusting all its own instruments to be able to reflect that increase in funding costs. Gotcha.
So that makes sense. So we've determined that for now in Nigeria, there are no money market rates, right? Money market is short term. There are no short term rates that are really real and are beating inflation right now in Nigeria for now. And you've walked us through how you guys set your rates when you get deposits from the investors, right? And what about promising a return? Because if I know NPR and I know all those rates and from the CBN, can I then advise a return? Can I tell my depositors, I'm going to give you 10%? Do you guys do that? Can you tell people how much you're going to get in advance?
Yes, I suspect they do. I suspect the asset managers do. Yeah.
Okay, all right. So we're building a case here, right? We're trying to paint a picture of how if I am a nobody, no novice guy, I don't know anything about finance, and I see a rate or I see an offer on the internet, how can I look at that offer and determine if it's real just by looking at the returns, right? Because I can look at an offer without me even doing investigation. I just look at the offer, I know it's real or it's fake. Many don't have that background to look at that. So I'm trying to walk it through to say, look at the offered rates. NPR is, like you said, 13%. Most people don't know what NPR is. But when I see a rate saying I'm going to pay you 10% fixed every month, that's going to be 120% a year. That automatically tells me or gets my red flags flying because this might not be a rate that is commensurate with the average in the economy right now, correct?
Correct, exactly.
Okay.
So with these things, I mean, like you have said, it's easy to tell. If you look at the rates, the first thing you should look at for a red flag for you to tell if this investment is Ponzi or not is the rates they are offering. That's the first red flag. So you're going to have to look at this benchmarking is what you can get in the existing rates you can get in the current environment, considering current realities. So I've been speaking to rates now. I spoke to 12.5% NPR. I spoke to TB rates. Average TB is about 3.5 at the end of last quarter. Then about 3.9. And then you have rates at the long end of the curve, the bonds doing about 12.5, 13%, and then you have the banks giving you 8% in fixed income deposits. And then you see this sudden company or whatever come up and say, okay, I'll give you 120% every year. I mean, that's a red flag already. Because the first question you should ask is, where do you want to get this money to give to me?
Gotcha.
To start
Gotcha.
with. So what are you going to be investing this money in to be able to get this kind of returns, such that you can give me the kind of returns you're offering? So that for me, that's the first red flag. But I always also put into consideration the fact that I am not in every investment market. So I've spoken to the fixed income market. I can speak to the equities market too. I'm not sure the current climb that anybody can get 120% return in 2022.
Yeah, we're going to come to equities. We're going to come to equities. Let me just summarize what you said, because you said a lot there that was very, very important. You were saying that you gave us the benchmark for the treasury bills, which is the short term, about 3.5%. You gave us a benchmark for the bonds, which is longer term, about 12.5%. You also give us the banks, about 8%. So what I'm hearing you say now, you also give us a benchmark, about 13% MPR, is that you should take a look at what's happening in the economy. Look at all these rates. That gives you like a band, right? You know, this is the upper band, this is the lower band, and all these rates are per annum. This is per annum rates, guys. So if the average here is give or take about 12% per annum, that is the average band. If someone then says, I'm going to pay you 14% per month, that is outside the band, and that should then make you ask more questions. That's what I'm here basically hearing you say, right?
Yes, exactly. And asking more questions means for me now asking you, where do you want to get this money from?
Where
So
are
if
you
I
investing?
cannot,
Okay.
if you cannot give me clear-cut answers as to what your business cycle is and how you're going to make this money, then for me, it's a no-no. And that's the clear sign that if the narrative is not clear enough. So if you're going to tell me that, okay, you're going into oil and gas business, I may not have expertise in that area of business. I may not know the kind of returns that I'll be able to get. But you should be able to explain to me this. I'll be able to tell me, okay, if I sell these volumes of diesel, this is what I get. I'm able to give you this amount. If that is not clear enough, then for me, I just feel that's a clear sign that it's not real.
That is perfect. That's a good foundation that you and Tony have laid for us, right? So now we know what to build on. Let me bring Brenda back. Brenda, I hope you can hear me. Let me bring Brenda back. Brenda, can you talk about what Gloria has explained, where she's investing, the band limit? Can we use the legacy money market as, so we say, a case study? Can you walk us through how you guys then build out this portfolio? If I give you guys my money, where do you guys invest it? What assets? Tony give us an intro on that. Where are you guys putting that money? And what are the bands and all that business cycle, blah, blah. Can you give us more insight on that?
All right, thank you so much, Kando. First off, let me even say that just as an addendum to what Gloria has said, when you have an investment, the first thing that should be ringing in your mind is, investigate before you invest.
Investigate before you invest. I am stealing it, and I'm not going to credit you. Thank you very much.
That's like the lowest low that you should go as an investor. What am I investing in? A lot of people could come up and tell you, oh, we're into so and so, just really high-flying things, and then you should ask questions. Okay, so I have a protocol. Where is it located? How is it run? What is the cost of funds? You must be able to ask these questions and get satisfactory answers. The truth of the matter is that everybody gets moved by high interest rates, right? Because everybody's trying to beat inflation. But at the end of the day, you have to be sure that at the very least, your capital is safe and secure. Now, if your capital is not safe, if you are not sure of getting your capital back, then you shouldn't even be. If you have to pray every night when you're investing, then that's not a good investment.
Right. That's a very good one.
Right?
Yeah.
Yes. So you have to first of all investigate before you invest. Now, for the money market fund, right? We invest in general treasury bills, right? And these are very safe instruments. We can tell you that your funds are about 100% safe because the returns might not be as high as the person across the street telling you 15% returns, but that's because we're assuring you of the security at the very, very least of your capital. Of course, the fund looks to build on and give you interest, but the first base of the whole investment scheme is that your capital is very, very safe and secure. Now, I'm emphasizing on this because it's important that you don't lose money, right? You are investing in an opportunity opportunity where your money is not lost.
Mhm.
That's the first point. And then, of course, upon that, they will begin to build on interest rate. Now, the money market fund, the way it's run, let me just give you a rundown of how the fund works. It's for a minimum of 30 days, right? So you have liberty to pull out the funds at the end of 30 days if you have use for the funds, and then there's no penalty attached to that. So the minimum investment period for the money market fund is 30 days. Now you can start with a minimum of 1,000 naira, right? Now the first thing I also want to disabuse people's minds is a lot of people, when they hear of investments, their mind goes to, oh, it's for millionaires, or the people who have a lot of money. Now the truth is, for me, I feel like investment first and foremost is even a mindset that you have to build.
Mindset, I like that. Yeah.
Yes, it's a mindset that you have to build. So it's one of the reasons why the money market fund is open to. I mean, most people can afford 1,000 naira to set aside 1,000 naira for 30 days, right? So it's open to people from different spectra. You know what I mean? And of course, if you want to invest in billions, you're also very much welcome. So it's not limited to just low-end earners. Now you invest the minimum of 1,000 naira, and the minimum investment period is for 30 days.
Mm-hmm.
Now, how the fund works is interest rates is determined on a daily basis.
Mm-hmm.
So for every single day, there is a return. For every single day, there's an interest that accrues on your account. Now, so for instance, if the interest rates as at today, I'm giving this as an example, is let's say 6%, for instance. Tomorrow it might be 6.1. Next tomorrow it might be 6.2. The following day might be 5.9. That's how it works. So it's calculated on a daily basis and set aside. At the end of the quarter, whatever interest has accrued is paid out to the investor or reinvested with the capital. Okay, so interests are paid out at the end of every quarter.
So interest is calculated or compounded daily, but it's paid out quarterly.
Paid out quarterly, yes.
Gotcha.
So if today's, and my figures are just for examples, right? So if today's rate is, let's say you make 2,000 naira on your capital, it's set aside, okay?
Mm-hmm.
Tomorrow you're making 1,005, it's set aside. Next tomorrow you're making 5,000, it's set aside.
Mm-hmm.
So at the end of the quarter, whatever that accumulates to is either paid out to you or now added to your capital.
Oh.
And then the cycle continues again.
Wait, so it's compounded.
Yes, I'm trying to be careful with the use of
Compounded.
the word compounded.
Gotcha.
I don't confuse people, right?
I hear
so
you.
that's why I'm using the word set aside.
Gotcha. So, if I gave you guys my money and I went to Canada, right, and I went in Canada for 2 years, what you're essentially saying is that my interest is going to be paid into the account automatically, and then you guys would invest my interest plus the original principal. Is that
yes,
correct?
so you're giving the option to choose. It's either you want your interest to be paid out to your account, or you want your interest to be reinvested. So whichever of the options you choose is what we are going to do with your funds.
Gotcha.
Yes.
Okay, perfect.
Now, very quickly, sorry, let me also say that, it's funny how a lot of times people put in monies and are so eager about how much interest am I making, and then sometimes you see people are not very patient. Now, investment, for me, I feel like investment is not it's not a sprint, it's more of a marathon, right? And you don't, when you plant a seed, you're not going every day to dig it out to check. You're not going back there every day to check, okay, is this seed sprouting right now, or is it still in the ground, and all of that. Sometimes when you invest, my advice to people is just put the monies there, and that's why it's important to invest in something where your mind is at peace, so you can put in your monies and then you just go to sleep, and at the end of maybe 30 days, at the end of the first quarter, you see your interest payments. My advice would always be learn to, top up. If you want to do, if you want to have a standing instruction, if you're a salary earner, you want a standing instruction, and say, okay, at the end of every month, I want a certain amount, 100,000, 50,000 to be added to my investment every single month. Before you right? At the end of a year or 2 years, you will be surprised at how much you've been able to, invest in that portfolio.
So can I do that? Can I do, brother? I can do that. I can tell my bank, not FCMB, if I use another bank, I can set it up that I pay 1% or 2% from my paycheck directly to the money market fund. Is that what you're saying? I can just do it automatic. Okay. Yes, excellent.
Yes, you can do that. You can do that. So that's one thing that I think that would also work for people. Just be able to, grow your portfolio, grow your investment portfolio, and don't be too quick to. So what I say to people is when they ask, oh, what's the interest rate doing now, and say, oh, it's too low. And then the question I ask is, what's the next best thing you want to do with this fund?
The next
what's the next big idea that you have for the fund? Because at the end of the day, you walk away with your money and say, oh no, I'm not doing this. The interest rate is not high, and then you spend it on something that you probably would have done without.
That is a good insight right there, Brenda. Good job.
Yeah. So for me, it's like that's why I said from the beginning that investment really is a mindset that you have to perform.
Gotcha.
So, it's a marathon here.
Yeah, Brenda, you said a lot, and I want to just take you back. I like the investigate before you invest. I think that's the most important thing, and this is essentially why we're doing this space. You have to ask questions, right? Even if it's good and even if it's bad, you must ask questions about where your money is going to sit in, right? How are you going to get paid back? Where are you going to invest? So I like that quote and the way you simplified it. Investigate before investing. Investing is also a marathon. Like you said, it's a long-term process. You can't make the returns. Like Warren Buffett says once, right? You can't get 9 women pregnant and have a child in 1 month. It doesn't work that way. It's got to be the other way around. You get 1 woman and you wait for 9 months. You can't get 9 women pregnant and get a child in 1 month. So that was Warren Buffett making the same point they are making. But the part I did like as well was when you talked about investing to chase returns. And this is the thing that I really want to break in the minds of Nigerians. Investing is a behavior. And the behavior right now I see entrenching. Even in the questions people ask me is this thing of what am I going to get today? What am I going to get tomorrow? What is the interest rate? What's the ROI in 1 month, 2 months? That's what I see a lot of people ask, And I like that you're making the point again that investing is long term. You are not chasing returns. You are trying to meet an objective. So even though inflation is high, if your objective is safety, and your objective is to save money for an emergency fund, then you want to go to a safe place that invests in, say, treasury bills and make that investing. You can't chase returns. You can build a portfolio that one part is risky and one part is conservative, but you can't chase returns with all your money. So I like the way you broke that down with those 3 points and examples, right? Did you want to add anything else, or should I go to my next question with you guys? Okay, so I personally, right, I tell people before you invest, you have to have an emergency fund before you invest. So even if you do find a great investment, you want to have an emergency fund. What's an emergency fund? I define it. It is 3 to 6 months of your necessary expenses. In our industry, we call it your non-discretionary expenses that you must make. If you live in Nigeria, this is a very, very important account. In the United States or in the West, if you break your leg, you can call 911, an ambulance would come, take you to the hospital. If you have insurance, you can pay. If you don't have insurance, you can use your credit card. So there's lots of safety nets for you that if something happens to you, you can recover. In Nigeria, and I say this responsibly, right? You are one sickness away from passing on. If you fall ill and you don't have money, you could pass on. So having an emergency fund is not just having a cute investment. It's actually very, very necessary that you have this emergency fund. And I like the money market funds, especially because, like you said, it's 1,000 naira. You can set up an automatic withdrawal. So if I earn a salary, I can pay 1% minimum from my salary. Before I see the money to spend it, it goes straight into that money market fund, right? And like you've also said, Brenda, it is compounded. So it goes in there, it's investing for me, it's passive income. I'm not doing anything. I really like that fund. I want to see if you can talk more about how I can use this money market fund as an emergency fund to give me some quote unquote insurance. We'll love you, Brenda and Gloria, to see if you can speak on this, please.
Yeah, so I totally agree with you, Pablo, as well, and that's the beauty of the money market fund. It's so I think a point I missed was, yes, the minimum investment period is 30 days, but it's open-ended, so you can leave your money for as long as you so desire. You can leave it for as long as 2 years, 5 years, 10 years, as long as you want to leave your money for. The only thing is it's for a minimum of 30 days, right? Now, I like to be very practical so that people get it. I have my house rent in my money market fund, right? So I know that at so point, I need to pay my rent, right? So I already know that, okay, every month, this is how much I need to set aside, right, into my investment portfolio. And then I know that this portion of it is going towards my rent. Now, like you said, emergency fund, sometimes you're going to work and your car just develops a fault, right? You need to be able to have a place where you can say, oh, okay, I can take out of this particular fund because, it's actually a fund I'm building for situations like this. I don't like to use the example of health because, God forbid, in the name of Jesus.
Oh, I'm going to stop you there. Brenda. Brenda, but I think we have to, like you say, when we get practical, right? You're going to, where our body is, it's biology, right? So we're going to have to slow down a bit, even if it's stress. And we don't have a lot of health insurance, right? So I think health to me is number one, really, on that emergency fund. And not just you. It could be parents, it could be kids, it could be your driver, the guy that drives you every day to work and suddenly his wife gets ill. That's an emergency for you. You can't say, well, it's your problem. So yeah, I just want to chip that in.
Yeah, trust me, I totally agree with you. So I mean, it's important that you're able to build your portfolio around a lot of this. Like you said, we don't have the luxury of just living from day to day in Nigeria. Anything can happen, like practically anything could just happen, and you would need to bring out funds from somewhere. But if you don't have the investment mindset and you spend every money that comes to you, you're spending it doing one thing or the other, at the end of the day, when situations like this arise, you find out that you're stranded. So tying it back to the money market fund, because the fund is it's easy, right? It's really easy. With a minimum of 1,000 naira, come on guys, 1,000 naira, you can start an investment. And you're not trying to impress anybody. Sit down. A lot of people actually need to sit down and have a conversation with their finances. Print out your statement of account. Look at the things that you have spent money on. For some people, it's data. For some people, it's just you realize that these are things that if you place a check on them, you'll be in a better space than you are currently. So for an emergency fund, I think the money market fund also would definitely be a very good option for people who are looking to build that portfolio.
And Brenda, what's the minimum to put a month? What's the minimum to put a month? Just minimum.
No, so the minimum entry amount is 1,000 naira. The minimum additional amount is also 1,000 naira.
Okay.
So you can pace yourself, really. You can pace yourself however is convenient for you. You can pace yourself. If you want to pay in monthly or weekly, you're welcome. If you want to make top-ups, like we call it, if you want to top up your fund every quarter, you're welcome. So it's very flexible. It's very flexible. And once you could go on the website, you could talk to any of us, send an email or a DM, and we'll be happy to, just direct people on what to do.
Gotcha. Let me play devil's advocate here, right? I know many people on this space that are asking, listen, I hear you, inflation is still 15%. I hear you guys say this, but inflation is still 15%. And I'm earning in Naira, right? And I'm being asked to invest in Naira into this emergency fund that's going to pay a return in Naira. So let me just make this clarification again for you guys, right? An emergency fund, right? Your primary objective is number one, safety, and number two, liquidity. That's why you are investing. Safety and liquidity. This fund is not the fund that you're going to quote unquote retire on. This is the fund that you are saving up from your active income, that should something happen unexpectedly, you don't have to go and sell your retirement account or sell your assets. I always quote this study done by the Enhancing Financial Inclusion in Nigeria, EFINA. They're a very, very great organization. They basically polled some Nigerians and they asked us, what has happened if you have a health case or something happens, an unexpected financial need occurs, how are you able to meet that need? More than 40% had absolutely no savings or any way to meet an unexpected need. And it's not just in Nigeria, also in America. I think the number is give or take about 60 or 40%. The number escapes me, but 60 or 40% of Americans cannot raise $400 if they had an emergency. So it's not a Nigerian problem. It's really a global problem that people don't have savings that they can run to. The difficulty for you is this: should you see an opportunity or should a risk arise and you don't have an emergency fund, you will be forced to go sell down your quote unquote investment that you are using to control or to beat inflation. So I tell people the first investment you want to do is to have the emergency fund set up. 3 to 6 months of your expenses. You record it by expenses, 3 to 6 months at the minimum. In Nigeria, when you have higher inflation, you're going to say you want to do at least 6 months. That extra month is your inflation hedge. So what I mean is, if you are doing 100 naira in Nigeria, because inflation will take that 100 naira to 85 naira, 15% inflation, you want to save for 4 or 5 months. That's what you want to do. You want to invest in emergency fund first before you do your real quote unquote dollar inflation hedge investing. Very important point, guys. And Brenda and FCMB are giving you guys a way to do it. It's 1,000 naira. Link it to your bank account. Tell your bank account every month or every time you get a paycheck, take X amount of money away from my account and put it in this money market account. Brenda has said is compounded daily but paid quarterly. If you don't get your payout, it's reinvested. It's compounded for you. So it's easy. It's simple. Do it. Forget about it, autoplay it, and let it just build up there. If you have more than 6 months saved as an emergency fund, you could take some out, perhaps buy the USD fund, but start investing with the money market. It's safe, it's cheap, it's protection, and it gives you liquidity. Gloria, I know you had offered to talk about the equity side of the equation. Should we just touch on that, Gloria, if you might? Yeah. Let's just, since we're talking money market, just briefly touch on the equity side. I know FCMB also has an equity fund. Would you advise now with high inflation, that's why people are attracted to these higher yields. What's your take on putting money in equities vis-a-vis money markets in an environment with high inflation like Nigeria?
Okay, so to start with, investing in equities market is certainly not investing for peace of mind. So that already negates all of what you're talking about here.
Exactly.
So equities market is a high risk market. So if you're investing in the equities market, please can we leave the peace of mind aside? I'm going to talk about other things.
Gotcha.
Okay, so investing in the equities market means that you're looking for higher yields. So it's
not guaranteed.
It's fixed.
It's not guaranteed like you're saying. Gotcha.
Yeah, you can't get fixed returns. Your capital can be eroded. You can also get capital gains. You can so it's quite different from investing in the fixed income market, because in the fixed income market, like you've been saying all the while, your target is safety and liquidity. Okay, for the stock market, we can speak to a lot of liquid stocks. So I can say to a reasonable extent, if you're investing in stocks that have reasonable liquidity and in good names with fundamentals, we can say you can still talk about liquidity. But when it comes to safety, funds, points, we can't, for investments in equities market, we can't completely assure you of that. So if you, so some people invested in 2008 after the market crashed and lost all of their money. So it's not impossible for you to lose your capital. It's not impossible for a substantial portion of that capital to be eroded. But that said, even investing in equities requires a lot of caution and a lot of, like I would say, some common sense and understanding of the market. So as we speak now, the equities market has been a bit quiet for obvious reasons. So before now, the greatest participants in that market were the foreign portfolio investors. So you had a lot of international investors investing in the market, and they sort of drove that market, and the rest of us simply followed what they were doing. So you see the locals, the institutional fund managers, the local foreign investors were doing, but all of that narrative has changed for a while now. So we've seen a lot of outflow of funds from the Nigerian stock market. So currently the locals dominate that market, and so the people who are moving their activities in our market are the local institutionals and pension fund managers, and of course the individuals. So yes, there are still some. If you look at the market now, though things are a bit bearish for all of these reasons, for the fact that liquidity is a big thing, for the fact that I mean it's a pre-election year, so we don't even expect that many of these foreign investors will come streaming back into the market now. And also for, I mean, the greatest reason why the market will be bearish and is bearish because of this liquidity. So what usually happens is that we get, if there are funds move from other investments outlets into the money or into the stock market, you can get some quantum of liquidity. But that hasn't happened. Now we saw that happen in 2020, and we saw very good returns in 2020. So careful investments in the equities market can still give some returns, reasonable returns. But it takes study. It takes study of the market. It takes study of the stocks you're investing in. And it also means that you're constantly in the market and constantly watching the way the market is. So same as investing in a fixed income market, is not. I won't advise speculations in the stock market. So it's not chasing after immediate gains and chasing after. So some people, so it's to also invest with a long-term perspective, and to invest in companies that you know that will always remain sustainable, and to invest in companies that are doing well in terms of corporate governance and profitability. And we have some of those companies, many of the banks are in that category. You have some in the consumer space, the Nestle's of this world, and so it's if one does if one invests in the equities market cautiously, you'll make returns, and then you can also minimize your losses. However, like I said at the start, it's not all guaranteed that you can't have huge losses. So that's where you have the high risk and the high yields.
Excellent point, Gloria. And I asked that question on purpose to just explain to folks listening that if you want safety and peace of mind, you are doing fixed income, i.e. money market, bonds, treasury bills. Some people are going to be asking, but I want to get higher return. Then you are taking that higher volatility, that higher risk. So there's no free lunch. With the money market, you put the money in, you can go to bed, there's peace of mind, you are invested with the SEC registered and regulated institution, you're going to get your returns as stated. But once you go equities, you are taking in a higher amount of risk, and you should be prepared for even the erosion of your investment principal. Making that point, and Scott Gloria has run us through the comment of why those two investment classes are different. Guys, we've been here for give or take about 45 minutes. We've got about 310 folks listening in. I'm just going to do a reset of the room. We're talking about investing for returns and peace of mind. We're trying to explain how institutions determine rates that they pay out to investors. So that way that if you are trying to invest, you can have a sense of how these rates are calculated. And that then gives you a perspective. When you see a rate that is beyond those bands, you can tell if it's quote unquote what we call a Ponzi, or if it's not just real, right? That's what we're trying to do today. We talked about fixed income. We talked using the legacy money market fund as a guide, how they set their rates, the minimums you get in about 1,000, how it's compounded, and how, most importantly, it is safe. Brenda has told us to investigate. It's a long term, it's a sprint. It's not a sprint, it's a marathon. And of course, Gloria has given us those macroeconomic guardrails. So I have a few questions I'm going to throw to Brenda and Gloria. This question is from Ahmed. Ahmed, and again, guys, if you want to ask a question, send a DM to Obianuju or to me, and Obianuju will ask, and then we'll basically just ask the question to the folks that are kind enough to have been here. So a few questions. This question comes up all the time, so I'm going to ask it all the same, Brenda and Gloria. Number one, Ahmed is asking, do I need to have an account with FCMB to invest in the legacy money market fund? That's his first question. And number two, does my salary account have to be with FCMB before I can subscribe for monthly deductions to be invested? So number one, does he have to have an account with FCMB? And number two, does his salary account have to be with FCMB before he can subscribe to this? So guys, go ahead and take it.
Okay, so thank you, Carlos. So you don't necessarily need to have an account with FCMB. From whatever accounts you have, you can actually make investments with FCMB Asset Management. So if you're running an account in any bank at all, you're at liberty to do. Okay, so let me just run you through how the process of actually getting started. Now there is, you can always visit our website at myfcmbam.com. myfcmbam.com.
Gotcha.
AM stands for asset management. So myfcmbam.com. On that page, you can actually part of the process, but you'll be required to upload a passport photograph, a valid ID card, and a recent utility bill. Now there is, you can pay on the portal, or there is, we have our account details, which we'll be happy to share with anybody that is interested. You know, when money can be paid into. So it's like doing a normal transfer from your bank account, really. So yes, you can do the standard instruction from whatever bank you have, and then you can also get started from whatever bank accounts you currently operate. Thank you.
Excellent. So he can do from any bank, and he doesn't have to have an account with FCMB to open the account. So Ahmed, I've also sent him a DM. So yeah, Ahmed, that's the answer for you. Then there's a question, right? Again, another question for you, Brenda. Someone is asking, what is the difference between this money market account and a normal savings account? I mean, for me, I'll let you answer and I'll give you my own take on it, right? What's the difference between this and just a normal savings account?
Okay, so first off, this is an investment account, so it is designed in a way that it helps you invest your funds. Now, for the normal savings account, apart from the difference in interest rates, which the money market fund is definitely higher than what you have in the traditional bank. Aside that, it's not operated. So, for instance, you don't have an ATM card to your investment account, right? Like you do for your savings account. So your savings account is the account where you can have your everyday purchase, everyday, spending and all of that stuff. But for your investment accounts, it doesn't work that way, okay? So for instance, you want to make a redemption, you have to fill a redemption form, right? And redemption usually will take between 1 to 5 working days. So it's something that you necessarily have to plan. So you know that, I'm going to need money on so and so day. So, okay, I need to apply for my funds on so and so day, right? So it's not the everyday account where you pay money, withdraw, or cash deposits and all of that stuff. It really doesn't work like that. So that's like the major difference between, and then of course you can call yourself an investor. Yeah, thank you.
I like that, Gloria. And also, am I wrong to say that savings account goes to the bank? So the savings account is going to the bank's balance sheet, right? It's a deposit to the bank. But if I do money markets, am I investing my money, saying federal government treasury bills? Am I diversifying more if I buy the money market? Is that a correct statement?
Exactly. Very correct.
Okay, so I'm more like you said, I'm more of an investor when I buy the money market funds. for the city. So that's basically the one of key advantage for it. So again, if you want to speak, guys, just ask me, and I'm going to ask Obi is here. She can add you on to speak, and you can send me a DM like you guys have also done. So again, a question for you from this is Jerry. He's asking, if I am abroad, I'm not in Nigeria, how can I invest? Yeah, so he's asking, how do I invest from the UK? What can I use as a utility bill since I invest in the UK? So Henry, I'm going to send your DM to FCMB. But if Brenda wants to take that, I'll be glad to have her answer that. But I'm going to send you a DM directly to FCMB. Brenda is asking, what can he use in the UK for KYC since he lives in the UK?
Yeah, he can send us his identity documents in the UK. Whatever he uses as a utility bill over there, he can send to us as well. But we'll also be happy to speak with him after this session.
Yes, I'm sending him over to your DM. Then you guys can take it from there. Okay, so I just played out a few. Let me ask you another question, Brenda. So in terms of the money market, this FCB money market fund, what can I use it for my kids? If I want to set my kids set up, right? Can I open an account for my kids and then have them save money in there, and it just keeps on compounding? Maybe I pay school fees from there, so I put money in there, give them a card. Is that possible?
Yes, that's very possible. I'm aware you have an arrangement with Tony for your daughter.
Tony has not answered me. I'm sending it on Twitter Spaces so everybody will hear. Tony has not answered me, but I'm patient.
I don't know how far you people have gone on that.
Okay.
But yes, you can open an account for your children, right? It's actually even advisable to, if you have children who will probably be going into secondary school, university, and you want to plan towards that, it's good that you have investment portfolios for them where you can consciously make, monthly or quarterly or at your pace, really, just make investments on their behalf until maybe they become adults or whenever the need for the funds arise. But yes, we encourage parents to open investment accounts for their children as well.
So that way I could set up like the direct deposit from my salary to the account for the kid, and it's just growing there, and I can transfer it to him and all that.
Correct.
Okay, great. So yeah, tons of questions. Obi, do you have any questions there? I have DMs. I'm trying to struggle to read them and also send to FCM. Do you have anything on your end, Obi? Anybody wants to speak? You can.
Yeah, okay, so I'm trying to two people requested to speak, so I think they have here Uzoma Area and then Ojo Agu.
Yeah.
So I think they can go ahead, but from DM, I had a question from Uzoma Area, but I think he responded to both. Uzoma, if you still want to ask your question or you have any other question, you can go ahead and unmute your mic when I'm done and speak. There's another question, and he was asking about the rates on the FCMB money markets. On FCMB money markets, and then he's also asking how he can know the rates, if the rates for investment, and of course for Ponzi, how you can what's the rate actually, so you know that this is a Ponzi. What is the average rate? That's what he's basically wanting to know.
Okay, I think that was someone coming off mute.
Hello, Carlo, did you hear me?
Yes, I heard you perfectly.
I think Gloria or Brenda can respond to it.
Yeah, I think Gloria did a great job on just talking about the gadgets. I wrote everything down that she said. She basically gave us the rates of return on the benchmark, say MPR, about 13%. T-bills, treasury bills, which are short-term borrowings to the federal government, right? About 3.5%. Bonds, which are long-term borrowings to the federal government, about 12.5%. And of course, the bank, about 8%. So what she was saying is that if you take a look at the rates in any economy, US, Nigeria, if you take a look at the rates, especially the rates that the government is borrowing from, That gives you an idea of the high and low of the low risk investments in that economy. So if the low of Nigerian investments is going to start from about 3% and the high is going to be about 13%, what we call the yield curve, right? If the low is 3% and the high is 13%, so maybe 13 plus 3 divided by 2, that gives you about 7.5 or just something like that, right? So you have an average or a guardrail. This is per annum. This is per annum. So if you then see an offer offering you 10% per month, that's going to be 120% per annum. That tells you something is off because the bank is taking your money to invest in the same economy to pay you a return. But this guy is taking your money and is taking your money to invest somewhere else. So like Brenda and Gloria are saying, where is he investing? That he's going to invest at a better rate than the banks and can also offer you safety. So there are lots of folks that can take your money and do say this investment in the internet, currency, crypto, but is it safe? That's the question. Is it safe? So it's not just the returns, but is it safe? So you have that guardrail that you want to see if it's safe. I don't know if Uzoma wants to speak. I want also get Gloria in to come back again and talk about that point. But let me just clear Uzoma and Ojoago to speak, and then we can get Gloria to come back in and just give us a rundown again. So Uzoma, go ahead, sir.
Thank you, Mr. Carlo, and every other speakers. Actually, my question has been answered, so I will just be waiting for the FCMB guys to reach out to me. I'll drop my email with your energy, and I'm very keen on this because I really want to invest.
Yes, I sent you a DM with your details to FCMB, so they will contact you. They're very, very efficient on that note. They will contact you via DM and all that, right? So thank you so much, Ozo. Appreciate you. So Ojoago, yeah.
Ojoago speaks. Brenda or Gloria, someone is asking if this is open to students. Can students also invest? I want to also believe that yes, we can invest. Just responding on their behalf, but they can also respond to that.
Yes, of course. Students are welcome to invest. I have a few students who even from this space have invested, so yes, students are very much welcome. They're actually even encouraged to, because like I said, it's building a culture, a mindset, so the earlier you start, the better. So yes, students are actually encouraged to invest.
I think it's a very important point. If you're a student, right, it's 1,000 naira. I will say start. Start and get the habit. Get the habit. Don't worry too much about the interest rate. Get the habit of putting money aside. So if your parents give you money, just take 10% and put it in the bank, right? Just get that habit locked down. Because once you get a job, then it's easier for you to save. Income is not savings, right? The more money you make doesn't make you save more. So when you start to save when you are not making a lot, it really helps you. Finance is about behavior. So I would really like if you're a student to basically try to enhance or to learn the act of saving. So good point, Brenda, yeah. So Ojoago, you can come up, meet and speak, and then we can go back to say having Gloria walk us through those guardrails again. Ojoago.
Okay, thank you, Mr. Carlo and other speakers. It's quite a commendable program this evening. I really enjoyed it. People comments opening the account using the link.
Already?
Yes. We go and set completion rate. It's beautiful. And I want to actually recommend it for students. This investment vehicle is coming almost 12 years late because I remember during youth service, some of my colleagues were investing in shares. I was feeling somehow that this is not going to be sustainable because at that point, as an accounting student, calculated a lot of things. I knew that something is wrong. I didn't invest. When some of them burned their hand, I told you that some of these things it's not going to work because the banks then were building their castle without foundation. Now, I want to commend FCMB investment and the work they have done. I'm on their app currently at 75%, as I've said. But I saw that they upload ID card, SD card, and passport and other things you need to choose from your phone, which is good. I wanted to take the shortcut to just snap those identity card and utility bill. If that option could have been added, it would be beautiful. That is that on that particular one. Another one thing I want them to clarify is I remember my church, I'm an accountant. I do a pro bono accounting for my church. There was an investment they made in IBTC asset management back in 2013. So later we discovered that the $1 million investment in 2013 is now 731,000 naira. So later we investigated, we were told that because it was high yield, it can affect the capital. Now I want to know if I continue with the process and complete it, which probably I will do it this evening. Is it going to be the interest, no matter the fluctuation in the investment in the market, when they invest the money that we are saving, we want to be assured that it will not affect the base, which is the money that belongs to me. Because from what Mr. Kalu has said, we need to save for an emergency. We are in Nigeria, some of us don't intend to leave, want to remain, because it's not everybody that will go. Let some people that want to go, I wish they want the best is a good move. But some of us that want to stay, want to actually have this emergency fund. What he has said is very correct. I have some of them, I believe in asset management insurance very well, because I don't want a situation where an emergency fund, which is really an emergency, I have maybe a little pressing need, I will run to the bank and withdraw my savings. So we want to be assured that, okay, no matter the fluctuation in the capital market, the interest rate, the capital will not be affected. That is the real amount invested will not be affected. So that is that.
Odrago, I want to make sure that we answer that very important question you asked. So can you repeat the one about not the name of the institution, but that your principal will not be affected? So I want Brenna to take that. And of course, you already in there 75%. Great guy. Send me a DM, I'll send you a copy of my book. Yeah, send me a DM, I'll send you my book. All right, Brenda, could you take his question, please?
Okay, yes. So one of the major features when I was talking about the money market fund is that the objective is first to preserve capital and then generate stable income. For the money market fund, capital is secure. Your capital is 100% secure for the money market fund. So there is no fear of losing from your capital investments. What we look at, or what you might want to pay attention to is, so how much yield am I getting? But in terms of the capital, it is 100% secure. So your capital will always come back to you. For the money market fund, your capital is very, very much secure.
That's a great point. I think just to,
thank you very much.
Yeah, it's fixed income, so your principal is secure. You're going to make interest on your principal. The principal is there and it's locked in. Great.
Thank you, Mr. Kalu.
How you doing?
I want to have a question.
Yes, you can go. You can go ahead. Thank you so much.
Thank you, Mr. Kalu. Also, I want to appreciate Obiano Jubioria and Brenda for your explicit on some of the things you've explained. I want to ask this question, please. For anyone who is interested, I want to ask, what is the relationship between the current bank that one is operating and also the FCMB bank? I think you've answered it, but not really clear. It wasn't clear to me. I want to understand, is it like you have an integration directly with the current bank anyone is using, so that it's easier for you to look at either monthly based on individual choices? That is one. Two, I want to ask, in case you have or you can provide a glimpse of what is possible or feasible in terms of investment. I joined when someone started talking about shares. I could have actually directed the question to the person directly. Is there any guideline on how to select shares? I'm aware of, that should be last 2 weeks or thereabouts, when there was this news from an asset, someone that actually bought assets, assets shares, and that was up like 3 years, and that was around 20,000 plus. Now, at that
this month, I mean, it was like 10,000. So it really caused a lot of disaggregation in people that are interested in going into shares and like. So please, I want to ask me, do you have any process or probably any training? Mr. Kalaja, I would also like you to just give me a view of selecting, assets on the long term, medium to long term. I really appreciate that. Thank you.
Yeah, so Brenda's going to take the question. Brenda or Gloria will take question on the FCMB, the integration with FCMB Bank, stockbrokers, and all that. But so just to that, if you are investing in stocks or in, so we say equity, you are investing in the shares and the losses of a company. You are investing in the profits and the losses of a company. So what is a company created to do? A company is created to make a profit for the stakeholders. Stakeholders are the investors, the government, of course, the employees. So what is the one single metric should you look out for when you want to invest in a stock? Earnings. You want to look at the earnings. Is the company making earnings? Notice I didn't say profit. I didn't say sales. I said earnings, right? Is the company making earnings? So what are earnings? Revenue is what the company sells. Then you take away your cost, you have net sales, or should we say net revenues. But all that is not really cash. In the end, the company has got to generate cash from those revenues for you. So the price of a stock is what they call the present value of all those future revenues brought back to today. So if you want to buy into a stock, look for a stock that's going to make revenues into the future. So Apple, for instance, is the largest company in America. It's large because its market capitalization is large, meaning that the stock price and the number of shares issued make it the largest company because Apple is selling phones. And phones, the market says that Americans and the rest of the world will keep on buying phones into the future. So the earnings for phones and for Apples is going to make Apple profitable. That's why you are buying the share. But if you buy into a company that is in an industry that is going to fail in the next 5 or 10 years, for instance, coal, there's a big push to take the world off coal, right? So if you are investing in coal, you want to ask yourself, in 5, 10 years, will there be earnings in coal? That's how you look at for companies. Which ones over the long term in the future are going to generate earnings, right? That's basically how you want to look at it. And then let me plug my book. If you want to learn more, buy the book. There are lots of other books you can also buy. And keep in mind that FCMB also offers free training to employees. So if you want to also learn about investing, go to your boss and tell your boss that FCMB offers free training, right? They should invite FCMB to come talk to the staff. FCMB Asset Management to come talk to the staff about investing. That's another way you can get it done. So 2 ways for you there. But we're going to let Brenda or Gloria come in and talk about the linkages between FCMB Asset Management and, of course, the bank and other stakeholders. So, guys, you got the floor. Brenda, sorry, I hand it back to you or Gloria.
Thank you.
Okay.
You're welcome. So, Brenda, he was asking about the linkage. You can go for it.
Okay, can I speak to this one, Carlo? Good evening.
Yes, you can.
Okay. Okay, to answer for the integration between FCMB Asset Management and the bank, or the bank any interested subscriber is going to use. So irrespective of whatever bank you want to use to invest or set up your direct debit, you can do that. We're a member of the FCMB group, so it means that we have our own regulation and a little bit of autonomy to do things within set regulations. So no matter the bank account you're using, all you can do is set up your direct debit right from the app of that bank. If that is possible. If it's not possible, you can also go over the counter to demand for you to set up like a direct debit mandate to be, deducting a particular sum into the investment as you wish. If you want to, be disciplined enough to do that on your own at a certain date at the end of every month, you're allowed. So it is feasible for every bank, even for our dollar investments. If you have like an offshore account, that is also allowed for you to use it to invest. So I don't know if this answers Drake's
question well. If it doesn't, you can send us more DM or just let us know.
Great, thank you, Ifeoma. So guys, FCMB guys, I have a whole lot of DMs. So if you send me a DM, don't worry. Even if I don't respond to you, I will make sure I send your DM to FCMB Asset Management. You can also send FCMB Asset Management a DM directly. But if you send to me, even if I don't answer you right now, I will make sure I send it over to FCMB, and they don't get in touch with you. Please come back to me and say you haven't heard from them. But Brenda, can you please repeat your DM and your email? Lots of people want to get across. What's the email? What's the DM? How else can they speak to you, please? Can you just say one more time on air, please, Brenda, or Ifeoma, or anyone from FCMB Asset Management? Ifeoma, you want to go ahead and just give us your DM and your email?
Okay, I think they can message directly to FCMB's FCMB Asset Management DM. It is open.
Okay.
We're responding immediately. I can also drop my email there. But I do not think I would want to put my name and surname.
Oh, you're fine.
Yeah.
I think the DM for FCMB is you can send to me, send to Benonju, or send to FCMB directly. I'll send it over and I'll track it for you guys. So if you just send me a DM, I'll make sure I send to you. This is also recorded. So FCMB Asset Management is I'm going to just do a tweet and you can see that name there. But it's recorded, so you can always go back and listen to this space and get all this information. Great. Let me.
You talked about the dollar, like you can also invest in dollar. I know somebody has asked if you can make your investment in dollars and what is the minimum? As well, I have a question in my DM. Somebody asking that question. So maybe you just respond to that.
Okay. We wanted to make today's focus about money market fund, but irrespective, of course, we have dollar investments. We have the legacy USD bond fund, which we've spoken about severally in our other spaces. But you can invest with as low as about $1,250, which is dependent on the daily offer price. That particular investment is traded daily because it's a bond. So depending on what the offer price is, but as at yesterday, is about $1,250 for a minimum amount to invest. I definitely have to invest in USD. Of course, when we're paying returns or remitting the money back, we're also paying you in USD. So that is about the range. The price moves daily, but what I've stated is what it was doing as at yesterday.
Okay, thank you very much, Tama. So let's also go back to the question. Somebody had asked, person is trying to get the difference between money market funds and the investing in bonds.
I think it's just the duration. It's just obvious. Yeah, I can just say that just real quick. Money market and bonds are more or less fixed income, right? So you are giving someone money and the person is giving you an IOU. So the IOU is 91 days or less than a year. That's short term. That's money market. If that IOU is more longer term, say 24 months or longer, that's a bond. So they are all IOUs. They're all like quote unquote safer because they are all sort of like fixed income. You know exactly what you're going to get ab initio. So they are all fixed income. The difference is just the tenure. Money market is short term, i.e. 12 months and below, and bonds are longer term, i.e. say 24 months and above. So that way we can just get that onto the person. And Ifeoma, Brenda, someone is asking you, can you guys come to his church? Is it only corporate organizations you guys do this free financial planning sessions on? Or can you guys go to their church, or can you guys go to their organizations? Just asking which is it. Is it possible?
Yes, it is very possible. They can shoot us, also send us a DM, just send an email with the details. We plan around it. And of course, we can come wherever, individuals, corporate, religious institutions, wherever it is. It's something we can obviously work out and handle.
Gotcha. That makes sense. Yeah, we should invite you guys over. Yeah. So you hear this, right? You can invite them. I think it's take advantage, guys. Organize something in your church. Do some financial planning session, invite them over. Let's talk, ask them questions, learn about this stuff. Take advantage of this offer from FCMB Asset Management. And so just to, Mary is asking, the minimum is 1,000. Yes, the minimum is 1,000. Let me also ask this question. Can I use my diaspora residential address, or should I use my permanent address in Nigeria? So if I'm just a clarifying question, he's asking, when he's filling out the form, should he use his permanent address in Nigeria, or should he use his diaspora residential address? Do you have any take on that?
Yeah, I think someone has also asked this question earlier.
Yeah.
So I want to talk because of the policies we have on regulation. If you're using a diaspora address that is not Nigeria, you have to just notarize the bill that you provide. The utility bill that you're going to provide us is going to be notarized. It means that a notary public in the UK, US, wherever you are, have to stamp or sign on it.
Gotcha.
And that's the only reason. So if you don't want to go through that process, it might be advised that you use your Nigerian address and provide a bill. You don't need to do anything on that one. But if you're using a foreign address, you have to notarize the utility bill you provide.
Gotcha, makes sense. Is there a maximum for the legacy money market account? The minimum is 1,000. Is there a maximum?
Honestly, there is no maximum, and this is out that we have a lot of institutions and corporate organizations that also invest in money market fund, for different purposes, for put away their working capital. People invest for different reasons, so there is no maximum. I can't come and be talking about the kind of clients and classes of clients that we have, but honestly, we have a lot of ultra high net worth clients, retail, mass affluent guys investing. So there's really no maximum, but there's just a base for the minimum, just to track number of units. But you can invest up until any amount you can afford.
Gotcha, that makes sense. Thank you so much for answering that. I'm just reading through the DM, just trying to get it out. Interested in the money market scheme? Sure, we've done that. I have an account with FCMB. How do I start? The best way to start, guys, is just to send them a DM or go to the website and then try to download those documents. It's a guy already has done 75% already on that. If you don't know how, send me a DM. I'll send you the link. That's going to be the best way for you to start and all that. And I'll follow up with you as well. About the kids' investment, how can I go about it? I need to invest in my kids. The same thing. So, do they open the account in the name of the child, or do they open the account in the name of the parents? And how does that work?
Okay, so if you're opening in favor of the minor, if you want to put it in their name, we need some documentation to show that the account belongs to a minor.
Gotcha.
So we would need is a little baby that doesn't have an international passport and all of that. So we need their birth certificate. But if you want to open it in your name, fine. But we have a lot of accounts that are opened in the name of minors, just their name. They will carry their passport, photograph. It would also have a birth certificate to also indicate that they were minors at the time the accounts were open.
Gotcha.
So you can run it up until they get to a certain age. If you want, and hand it over to them if you also wish. So you can open it in any name that you want, whether even for some people open for their unborn babies. I don't even want that. Yes, we have people that set aside accounts in babies that are born yet, but they have to declare that because they wouldn't give us all the documents that we need. But they maybe propose it in the name that they want to name the child and have it start running. But yes, you can definitely open a minor's name and provide accompanying documents. Yeah.
Excellent. Thanks for that. So I just added Whimsy. She wants to speak, and I'm going to let her speak. But great. And Gloria, I also have you on lockdown. I'm going to have you come back and do that cleanup on the boundaries. I just want you to say it again, so folks understand the rates in the economy and how they can use that to essentially determine if the rates that are being offered are not real. Winnie, I have you on. Winnie Ezime. How are you doing? Go ahead and unmute and ask your question.
Thank you very much, sir. Thank you. Sorry, bro. I just came online and I find what you guys are talking about quite interesting.
Of course.
I just want to ask, is there going to be a record for the session?
Correct. Twitter would record for 30 days, but on my podcast, I do the recording and it's there forever. My podcast address is going to be right on my TL. It's the way I see it. So if you go to my TL, you see the podcast, I'm going to post this recording there and you're going to go back and read other ones. We've done this session with the bank. They've been kind enough to come 3 times now. So if you go to the podcast, you will see the other ones we thought. We did the USD investment with them, and we also did investing outside America with them as well. So you can also go there and get the other recordings. But we are here every Saturday, 8 p.m., and we talk about money, finance, and personal investing. So every Saturday by 8 p.m., we'll have a different guest that we bring over. So we're glad to have you join us here.
Well, beautiful. Thank you very much. Thank you, Obianuju. Thank you, Ifoma. Thank you so much. I'm really enjoying myself here.
Super. Hang around. Yeah, hang around. Excellent. All right. So I got Marquist. Marquist, how you doing? You can unmute and go ahead and ask your question, sir.
All right. Good evening. I'm joining this piece from Ghana, and it's quite an interesting and insightful speech. Carry well done.
Thank you, sir.
My question is, I want to know to what extent an investment bank can deal with a commercial bank. I'm asking this because I was doing an investment with an investment firm in Ghana, and to the best of my knowledge, I understand you went to a commercial market where they promised them certain rate. So those money market funds located by the SEC of Ghana, by the way, their rate was slightly higher than the normal one in market, and I think it was 10% or so. So later, the investment.
I'm gonna Marquis, you're not too clear. You're not too clear. So just check with your settings where you're speaking from, and then go ahead and talk. Yeah.
All right. So am I audible?
Yes.
Okay. So what I was saying was that I want to know to what extent an investment firm can deal with a commercial bank. I'm asking this because I was having an investment account with an investment firm in Ghana, and my checks revealed that they went to an agreement with a commercial bank and they were investing with them at a certain rate. So they were also giving out, their rate for the money market fund was slightly higher than the normal one in the market, like from a different investment banks in Ghana. So I think theirs was slightly higher, like some 30% higher. And so at the point the commercial bank was liquidated, it became insolvent. So they changed boards, and that the new board that came didn't agree to the percentage that it was given to the investment firm.
Gotcha.
So in that case, the investment bank couldn't, give out the same rate they were giving out. So in effect, it was regulated. So I want to know, how is it regulated? How do investment banks deal with these commercial banks? So I know they work with them, but how is it regulated?
Okay,
They don't do things unethically.
That's a good question in terms of maybe the structure and the incorporation of how FCMB, say, money market or FCMB asset management is incorporated vis-a-vis FCMB, the bank, and all that. I don't know who wants to, if Ifoma, Brenda, or Gloria wants to or Tony wants to talk about just that relationship and how the incorporation and going concern. Who wants to just jump on and grab that? All 4 lovely ladies on scene. Great question, Marquist. So anyone, Ifoma, Brenda, Gloria, or Tony?
Okay, so I'll leave Tony to speak to the kind of interactions they can have in terms of investments with the banks. But as we speak in Nigeria, banks have a choice to have either a license to operate wholly as a commercial bank or a license to operate as a holding company with subsidiaries. So in the case of FCMB has that license to operate as a holding company with subsidiaries, and one of such subsidiaries is the investment banking arm of the business. So in that case, what you typically have is an FCMB holding company, and then you have all of the subsidiaries that follow. So you can have the asset management, you can have payments, you can have all of that, all of those subsidiaries as wholly owned subsidiaries of the holding company. So the commercial bank is a holding company. This is a subsidiary. The investment bank is another subsidiary. Now I understand that there can be some Chinese walls as regards communication and investments between these both, but I'll leave that to respond to.
Okay, I sent her an invite. I'm not sure if she's there, but I think you did a good. I think you answered that. Chinese walls. How you guys are set up. Marco, if you have something specific you want to do a follow up on, and you send me a DM, I can say, it's Ghana and Nigeria. I'm not sure how you guys are set up over there, but in Nigeria, it's a holding company structure, and over here, you have to be incorporated as a separate entity with your own board, with your own issued shares and all that. So whatever agreement you have, even if you don't, you have to know what you're signing up for and read, and exactly that's what you're going to go to town with. So you have to sign something, and that's essentially your contract with whoever you are giving your funds to. Tony, did you want to add anything to that? Same thing, yeah, but it's Ghana. I'm not too sure about how Ghana is.
It's a commercial bank, even investment bank, and they have different regulators.
Yeah.
In the Bank of Ghana regulates all the commercial banks, and the SEC is a regulator for the investment banks.
Correct.
So the same here as in Nigeria.
Gotcha. All right. So, do you want to add anything to that conversation?
Hello, Marcus. Thank you for the question. Thank you, Kalu. That was actually the angle I was going to come in. The SEC actually regulates the asset management subsidiary, while the actual bank, report, is governed by the CBN. So we also have to furnish reports and all of that to the Securities and Exchange Commission. So that's the angle of regulation that comes in with the asset management side of the business. Does that add a little more color? So it appears it's a similar structure in Ghana.
I believe so. Yeah, I believe so. So SEC will regulate the instruments and the participants in the capital market, and the commercial bank, so would regulate the banking side of the commercial market. But I think his question was more like, you got a bad experience with a bank that had an internal agreement with an investment firm, and then of course it changed hands, and of course the investment firm did not keep to the terms that was prior agreed. That was his point. But I think it wouldn't really happen here. So yeah, so that's what I'll say. Marcus, I think we've taken. I'll put clear. If you're not, please send me a DM, and I'm sure I will send you straight to Tony. I can speak to you. I'm going to add Sammy. Thank you so much.
Thank you.
You're welcome. All right. So guys, I'm just struggling. So I'm just trying to send the DMs over to FCMB. I've got the link. I'm going to post the link. Obenji, I'm going to send the link to you. If you could please post this link. That's the link to FCMB. So that way, folks that would want to just go onto the link directly and invest can just do that on their own. So Obenji, I've sent you that link. If you could please help and post that out, I would be much appreciated. I've got Sammy SE on mute, and you can ask your question, sir. How are you doing today? Where are you calling from?
I'm unmuted. I can't hear you.
I can hear you.
Okay, so I really don't have any questions. I just want to thank you guys for this sensitization you're doing on this investment. At least we'll go back and tell those few people we know that, okay, this is it, and they should also seek more advice from the experts. Like, I'm really enjoying this whole conversation and discussion, and I want you guys to do it more frequently. I'm making a request. I don't know if it can be granted, like every Saturday like this.
We are always here Saturdays 8 p.m. every Saturday. We talk about the different thing about investing, money markets, capital markets, personal finance, the economy. Every Saturday, even crypto, we talk about, but it's all geared towards your money. So this week we brought in FCMB to talk about the FCMB money market product because we want to use that product to sort of like say, hey, this is how it is supposed to be done in terms of how we select investments, how we invest your money, and this is how you can use it. So we're giving you an alternative out there. It's not enough for us to say don't invest in Ponzi, but we're giving you an alternative. And we're also trying to make the point that you are investing, first of all, for liquidity and safety first, before you can then go ahead and invest for like long term and all that. So that's the point we're making, Sammy. I hope yeah. And just guys, just to reset the room, guys. Did you have a follow-up, Sammy? Are you fine?
Yes, I'm all right. Thank you very much.
Excellent. Thank you so much. Guys, just to reset, I just gave you a synopsis of what we're talking about. Lots of guys are sending me DMs that they're just joining. Not to worry, the Spaces is recorded. It's going to be on Twitter and also on the podcast. And we're essentially talking about how to invest, how to find out if the rates that you are getting out there are not real, how you can determine that, and of course, where you can then put your money in what objective and in what security. Gloria, can I just have you come back if you don't mind? And now I'm getting lots of DMs on this, and just basically walk us through again. What are these rates in the economy that we can use as lay, quote unquote, lay people to compare with the rate that we get, say, online? So if I got an investment, guys, I'm going to pay you X%. How can I know that that investment or that number being offered to me is within reason? Gloria, you have done that before, but I want to do it again because we have lots of guys that have just jumped back into the chat. So if you could, I would appreciate that. Thanks, Gloria.
Okay. Okay. So in the fixed income space, so I think I'll make the rates more specific now. So as at the end of the first quarter, average T-bills rates. So when I'm talking about treasury bills, I'm talking about investments 1 year and below. So average T-bill rates came to about 3.97% as at the end of Q1, about 3.9% at the end of Q1. That's for T-bills. For the long end of the curve, very long end of the curve, the really long end of the curve, rates came to about average of about 12.5%. The monetary policy rate, which is the benchmark rate, is about 11.5% currently. So that's for the fixed income space. Yeah, OMO bills. I think OMO OMO is restricted, so it's not corporates and individuals cannot invest in OMO. Yeah. So OMO is just for foreign investors and then the banks, and then the quantum is even very, very minimal, so it's not really, but those rates too have come down considerably. So I think that's about, the last time I checked, about 6% about that. So that's looking at the entire fixed income space. So that's where you have safety of funds, safety of the capital, and then fixed interest rates over time. So like I was saying, so if you're going to be investing and if you want to look at the investment space and check if this investment is a Ponzi, the first thing that should strike you is the interest rate. So if somebody's offering you, like Carlo has been saying, offering you 10% per month, which is 120% per annum, the question you should be asking is what the person is going to be investing this money into. Okay, and I also missed out banks. I think banks fixed deposit rates, the highest I've heard in recent times, about 8%. So if you look at all of that space, you should know that for any guaranteed income instrument, then it should all hover around that those rates I have mentioned. Now there are also other investments. If you're looking at if the company is telling you, okay, I'm going to give you 10%, you can also ask more questions because perhaps they aren't investing in this space. Perhaps they're not investing. They're not going to put your funds in the fixed income space, which means that they probably could be getting higher returns. So the question to ask is, where is this money going into? And then, so because there are other markets that we may not be privy to the kind of returns that. So there's the commodities market, which I hear is giving very high returns currently. Then you have the equities market, and I spoke to the equities market. I said, if you're looking at investment in the equities market this year, it's been quite bearish. I mean, you would have to have a lot of investment skills and all of that to be able to make reasonable returns out of that market this year. So I'm not sure anyone would even want to take funds from you and promise you any fixed returns on the back of the equities market, because the returns can be very volatile. So those are the so if you're going to be comparing the rates you're getting, you're going to be comparing with what is the attainable investment climate you are in. And once the rates begin to look off, and once you can't, I have explained that once this the business cycle can be explained, the nature of what the borrower is investing these funds in cannot be explicit enough for you to understand the kind of returns the person is going to get. So if somebody can sit it through the investment if someone sits me now and says, okay, I'm going to invest your money in the commodities market, I'm going to be getting 40% return per annum, so I can give you 20% per annum. These are all the costs the person has to contend with. Then that's clear enough. I can understand that business cycle clearly. Then you can say, okay, it's not a principle. Once that narrative is not clear enough, then that should be a red flag for you.
Yeah, Gloria, I wish I could just put what you're saying on repeat so that people can understand exactly the importance of what you're saying. You have to ask the question, you have to compare the rate you are being offered with the rate that is currently in the market. And then, of course, if someone is offering you 10 times what the normal bank would offer you, you want to ask yourself, where are they investing to make that return? And if those questions cannot be answered, you cannot invest, or you want to be aware it's a high risk investment. We've had Gloria say this, I think, 2 or 3 times now, because we want to emphasize this point she's making. Brenda's made that same point. Investigate before you invest. Ask questions, guys. There's no free lunch really in town. So make sure you ask questions a lot before you invest. Thank you so much, Brenda. I appreciate that. But you also use another buzzword. I'll let that fly. You did OMO. So OMO is not like for us, right? It's for the institutions, the open markets. It's not for individuals, right?
Yes.
Gotcha. Excellent.
CBN stopped that to individuals and corporates in 2020.
Excellent. Gotcha. Okay, let me just, excellent. Thanks a lot, Gloria. Just reading my email link so guys, I've posted a link to the FCMB. If you go on the Twitter scroll, you would find the FCMB link posted there. So you can send a DM, you can essentially log straight back into the link, send a DM to me or to FCMB. And if you send me a DM, I will make sure I send it over to them. If they don't get back to you, just get back to me. But don't worry about it. Even if I don't read your DM, I will make sure it gets across to Ifeoma, Brenda, Gloria, or even Tony, right? All right. And is there going to be a recording? Yes, I've said there's going to be a recording after the show on my podcast and also on Twitter, and you guys would get that. All right. So here we are. So let me just start to do closing remarks, right? We've been here for close to 2 hours. I want to let the folks start to go back home. So in closing for me, right, we've talked to FCMB 3 times, and they have a lot of products, about 4 products. The way I look at it is this: if I am starting off and just want to invest, so I want to save money, I earn my salary and I want to start, I would start with the FCMB Money Market Fund. Why? It's just 1,000 Naira. It's easy to set up a direct debit from my salary over to that account, the FCMB Money Market. I can invest and they can compound it. I don't have to call them to say, hey, invest or roll over. They will do that for me automatically, right? I earn my interest as well. So it's super, super easy for me to start with 1,000 Naira, set up a direct deposit, and it just goes there and is growing on my behalf. So I use that as my emergency fund. That amount is what protect me if I have an unusual expense. I can walk in there and I can withdraw, right? I can just go in or give a call and I can withdraw. There'll be some time limit, but I can get my money back. It's not easy to spend it, but I can get it. So that's where I'll start from. Then FCMB also has got the FCMB Debt Fund. So that the difference is the same as the money market, but they're investing in longer dated investment. So instead of say doing treasury bills, which are for 91 days, 1 year, and such, they are doing longer term. So they are doing bonds, right? So if I want to invest for say 2 years, I want to send my kid to a school in Nigeria, or I have my rent money, or I have money for land, sometimes I know I'm going to spend in a fixed period of time. I could essentially then go over there and I could invest essentially in the debt fund. But what if I want to diversify my holdings, right? I want to invest in Naira and also to invest in foreign currency just to protect myself. I could then do that, in the FCMB USD bond fund. So what I'm doing is that I'm putting my money in dollars as well as Naira. And of course, like I said, any amount of money you're not using for 1 to 3 months in Nigeria, try to diversify where you keep it so that inflation does not really eat up a lot of it. So that's why I do the legacy USD bond fund. Then of course, if I'm younger and I can accommodate risk and I then want to invest for a longer period, then I can then consider doing equities. But remember what Gloria has told us, equities are risky. They bring in volatility. Your returns are not sure. But equities over a longer period do offer the advantage that if the product can be sold at inflation hedged prices, then equities could beat inflation. Equities, commodities. So I want to be in that if I have a longer term to invest and can accommodate the risk. So 4 products right there that accommodate the entire spectrum of investing. That's why I like that product. Ifeoma, I have a question for you. I have Majazi. She's asking, can I invest if I'm in South Africa? I don't know if she's Nigerian, but she's asking if she can invest if she's in South Africa. Majazi, I'm going to send your DM to the FCMB crew, but if Ifeoma can answer here, yeah, let her come in. Are you Nigerian? Let me ask you that. Ifeoma, could you come up mute and just maybe give us
Yes. Yes, you can invest. I don't know if he or she is Nigerian or not, but you can definitely invest in any of our investments. From wherever you are around the world, you can definitely invest in the currency the investment is meant for. So whether it's the legacy debt fund, the money market fund, the legacy USD bond fund, the legacy equity fund, anyone that you're interested in, you can definitely invest from wherever. Just providing us with the necessary documentation to verify that you exist and you're a person. Once we verify that, you can definitely invest in any of our mutual funds.
Excellent. I've sent the link over to Majazi. If you give me more information, I will also send it across to FCMB if you're Nigerian. But I've sent you that link. You can click that link and it takes you straight through to where you can get all that information. I'm also going to put something that just walks you through how you can set up an emergency fund. I'm going to send it all the way to Obeluju. If you can post that up for our guests, how you can set up an emergency fund with FCMB, that would just be perfect. Yeah, thanks, Obeluju. I see all the messages. So, guys, we're rounding up. Ifeoma, Gloria, do you guys have any closing remarks? Also, Tony, do you guys have any closing remarks for the followers and all? If I see a message, I'll jump back in. But do you guys have any closing remarks as we start to wind down?
It's been an interesting space. This is the third time we're coming back. So for the next one, if and when we come, it's going to be more in-depth, richer. We hope everybody take the lessons today and start somewhere. It's never too small, never too late. The next best time to invest is now. You just have to pick the one for you and just run with it and start with it.
Excellent. I like that. The next best time to invest is now. If you want to plant a tree 10 years ago, you didn't. The first time to invest is now. So I love that information. Thanks so much for also coming back all this time. Thanks for being a guest. Thanks for being a wonderful guest. Gloria?
Okay, for me, I'll say if you have to invest, you have to
try to be knowledgeable about the product you're investing in. You have to be cautious. You have to learn about the products, and you should invest cautiously. So what I'll just say is caution, because with the way things are now and with the search for yields, there can be the tendency to fall into various scams, and we're seeing some of those things come up. So like I said, if the interest rate looks too good to be true, it's probably too good to be true. So
as simple as that, really, as simple as that. Yeah. Thank you so much, Gloria. I learned a lot, so I appreciate you breaking down this complex topic into bit-sized information that we can basically take. My auntie Tony, hi. Can Tony speak? Oh my God. So Tony can't speak. Okay, I'll let Tony to discuss to come back this about our Harvard instrument, but I think she can't speak. She's off here. So Tony, we'll talk and we'll finalize this event. Yeah. So guys, we're winding down. Tony, if you come off anytime, you can say hi. I really enjoyed you guys coming back. And Brenda, I see that you're back. You were knocked off. I would like you to also say bye as well. Thank you so much for listening. We had a very, very interactive session, DMs, call in, and as well as interaction with the team from FCMB. They've got a great product, guys, and these are simple products to basically get into. Very, very simple. Emergency fund, investment funds, diversification funds, nothing complicated. It's all about your behavior. We want you guys to learn that act of saving, that act of investing, and also the act of doing your own basic due diligence. So just keep it simple. Keep investing very, very simple. There's really nothing that is new in investing. Tony, hi. Did you want to say bye and tell me when I should send this form over?
Hi, Carlo.
How you doing?
I thought we would have received some already, but like Ifeoma said, the next best time is now. So send it over now.
Tony, you're pushing it back to me. I thought we had a deal and you're going to send me this Harvard thingy. I thought that was the deal. This is reverse psychology.
We're working on it.
We're working on it, right? Super. Thank you so much. So Tony, Ifeoma, Brenda, and has she gone off? Gloria. I'm going to send you guys a copy of my book just to say thank you very much for coming and being such wonderful guests, right? We'll send it to you guys next week. Thank you so much. I appreciate you guys doing that. Brenda, you want to say bye as well?
Thank you so much, Carlo. It's been a pleasure just sharing this space with you. Thank you so much. I really appreciate it.
You're very welcome, guys. All right, guys. So what's left for me to do is to read the DMs. If it's a DM here, even after the show is closed, I will get back to you and make sure I follow up with FCMB. Send me a tweet, a DM, email. I will grab it. Have no fear. We'll take care of it. Obianuju, how you doing? Thanks for holding down the back end for us. You know, that work is very, very important. Sending out those tweets and all that. You want to say hi and bye to the guys?
Thanks, Carlo. Thank you, everybody, for joining this session this evening. Tony, Brenda, Gloria, thanks for all the info and tips. And most importantly, guys, let's not wait for life to happen to us and see how we can secure emergency fund for ourselves, for our family, for everyone. It's important, it's very, very important. And always remember to secure the bag. Have a good weekend, and we hope to see you all again next week, Saturday, same time.
Great. Yeah, next week, thank you so much. For next week, we're trying to bring back the guys from the Commodities Exchange. They were here last week, but we had Twitter outage. We could not take the guys from Afex. So we're going to try to bring them back this week if they can make it. So if they can't make it, we'll bring them back. So that would be just excellent. I have a hand up from Oyewo. Do you want to speak also? Yeah. So guys, thank you so much. We're here, like I said, every Saturday by 8. Make sure you get my book, guys. I got a book out. It's very, very detailed. It's Let's Talk About Your Money. It's on Amazon. It's also on Roving Heights. It's a wonderful read. You should get it. It's written in very, very simple language. We talk about everything from crypto to love, how you can invest your money with love, to kids, to buying stocks, to buying property, to commodities. We covered everything, how to do a budget, how to trade currencies. It's all in that tiny book. And I really, really recommend you all get it, right? If you're a student and you want a copy, send me a DM. I'll give you a special discount, right? All right, guys, thank you so much. We're going to shut down the space now. I love you all. Take care of yourselves and be safe. And bye. Shut it down in 5, 4, 3, 2, and 1.